Hello. Welcome to my channel. In this channel, we talk about money and business matters. This video is about tax mistakes that some small business make. Here are some common tax mistakes small businesses make. 1. Using the wrong tax form based on the legal structure of the business. Different types of businesses, such as sole traders, partnerships, limited companies, etc., have different tax obligations and forms to file. Using the wrong form can result in errors, penalties or missed deductions. 1. 2. Failing to file by the due date or paying late. Small businesses need to be aware of the deadlines for filing and paying their taxes, such as income tax, corporation tax, VAT, etc. Missing these deadlines can lead to interest charges and penalties from HMRC. 3. Not keeping records throughout the year or incorrectly entering information. Small businesses need to keep accurate and complete records of their income and expenses throughout the year, as well as supporting documents such as receipts, invoices, bank statements, etc. These records are essential for preparing and filing tax returns, as well as for proving deductions and reliefs. Entering incorrect information on tax returns can also cause errors and audits. 4. Forgetting to include supporting documents or making payment mistakes. Small businesses need to include relevant supporting documents when they file their tax returns, such as 1099 forms, R&D claims, patent tax relief claims, etc. These documents can help them claim deductions and credits that can lower their tax bill. They also need to make sure they pay the correct amount of tax and use the right payment method and reference number. 5. Incorrectly deducting startup costs or other expenses. Small businesses can deduct certain expenses that are necessary and reasonable for running their business, such as office costs, travel costs, staff costs, marketing costs, etc. However, they need to be careful not to deduct expenses that are not allowed or that are personal in nature, such as clothing, entertainment, fines, etc. They also need to be aware of the rules for deducting startup costs, which are different from regular business expenses. 6. Incorrectly classifying employees or mixing personal and business finances. Small businesses need to correctly classify their workers as employees or contractors, as this affects their tax and national insurance obligations. They also need to keep their personal and business finances separate, as this can help them avoid confusion and errors when claiming expenses and deductions. If you are enjoying this video, please hit that subscribe button. This way, you help us to create more videos, like this one, and to reach people, like you. Thank you. Now back to the video. Misunderstanding business tax obligations or not separating business and personal expenses. Small businesses need to understand the taxes they need to pay and how they are calculated, such as income tax, corporation tax, VAT, employers' NI contributions, etc. They also need to separate their business and personal expenses, as this can help them avoid confusion and errors when claiming expenses and deductions. These are some of the common tax mistakes small businesses make that can be costly and stressful. To avoid these mistakes, small businesses should seek professional advice from a qualified tax accountant who can help them plan and comply with their tax obligations. They should also use reliable tax software or apps that can help them record and file their taxes online. They should also be aware of the tax reliefs and allowances that are available to them, such as R&D credits, patent box scheme, employment allowance, etc. By following these tips, small businesses can save tax and improve their cash flow. Like and subscribe. Don't forget to check out the resources linked in the description and comment section of the video. If you have any questions or comments, please leave them in the comments section of this video, and we'll be glad to find the answers for you. Thanks. See you again soon.